Hey, this is Noel with Options Story, and I just wanted to do a quick video on a trade that we closed out today. We put this trade on January 13th in the ticker XLV, and what was unique about this trade is that it was actually an iron fly, and so broken wing iron fly, and I'll tell you a little bit more about that in a second. But we call this an iron fly because our short call and our short put are at the same strike price. So if you see, we put this on the 13th. The call was 104 and the put was 104. And you know, the exact name is not necessarily important because what might be confusing is, well, what says Iron Condor right here? What type of spread? And Thinkorswim platform, unfortunately, they don't do a very good job of allowing you to put on iron flies. And so we put them on as Iron Condors, but what is important and what makes it the iron fly is that the call and the put were both the same. And this really is a defined risk version of a straddle. It's just another way to sell neutral premium. We've also added another nuance to this trade by breaking the wing of the put spread. So you'll notice that on the call, there's a 4-point spread, but when it comes to the put side, there's only a 1-point spread. And in fact, we make money no matter how low the price of XLV goes. So by only having a 1-point spread in the put, we essentially, the XLV could go as low as it wants, and we're still going to be profitable in the trade, which is pretty cool. We also collected a credit that is larger than the put spread, and it means we have no risk to the put side. So kind of what I was mentioning there. And what's also cool about this is that we can make the most money on this trade if XLV settles a little bit higher from what here at our short strikes. So it's great to set the trade up in a way where you can make the most money if the price settles higher, but we can also have no risk to the downside, which is a pretty cool way to trade. You think about it in terms of your probability, your bet on this being profitable. So let me show you what's happened here on the chart. So we put the trade on the 13th, stock went up, and then it went back down, and we got a bump, and then it's continued to crash. I mean, it's gone quite a bit. Down to 99.14 it closed out today. And so because the price breached our broken wing put spread, it is showing us our max profit to the downside, which was 45 cents. We had to settle for 43 cents so the market makers would let us out of this trade. But this was a pretty quick trade, around 18 days. And, you know, I think one of the questions that oftentimes we get in this kind of scenario is, you know, you still had 21 more days before the expiration date. And so why not leave it on? And it's true that in a way, our ideal profit in this trade would be that the price would head back up to $104 per share. But, you know, I think it's a preference because we were still profitable based on it, you know, dropping quite a bit. We had maxed out the profitability to the downside. And so we'd be waiting to get it back up to 104. And to the degree of how much more money we'd make on that, it's probably not that much. So I'm of the perspective, and this is my opinion, is that, man, when you're profitable, take the money and run, reinvest it into other trades where you can keep using that capital to create gains. So, you know, it's your preference. I think some would argue, and I'll stay in it for another 21 days. And the reason being is that, you know, you're seeing this huge downside movement, which, you know, generally speaking, the next 21 days we'll probably see an uptick. I'm just not willing to wait around to see if that's going to take place. So hopefully that was helpful. This was a great trade, and walking away, we had 2 contracts on at $43. Not bad for an 18-day, and really very little risk. In fact, you know, the IV rank when we put it on was 17, and the profitability of profit when we put on the trade was 75.83%. So this certainly proved itself to be that as we took the money and ran. So hopefully this has been helpful, and we'll see you again in a future video.